Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Monday, May 4th, 2026, and we're kicking off the week by sifting through all the market commentary and AI-generated insights from yesterday, May 3rd.
That's right, Ethan. Our systems were quite busy overnight. We saw a decent number of posts and discussions flagging a good handful of stocks today. The sentiment is definitely a mixed bag, with some serious bullish enthusiasm in some corners, but also some very pointed concerns about valuation and underlying fundamentals.
Absolutely, a lot to unpack. Let's dive right in and see what caught the market's eye. First up today, we've got SoundHound AI Inc., SOON. Our analysis showed a highly bullish sentiment, with a lot of talk about a potential short squeeze, strong earnings coming up, and recent acquisitions like LivePerson really fueling excitement. People are expecting this one to, quote, print hard and moon.
Well, you know I love a good growth story, Ethan, but the KPIs here are screaming caution. While the revenue growth is impressive at nearly 60% year over year, SOUN is still deeply unprofitable, with a negative net profit margin and negative EPS. The beta is almost 3, which means extreme volatility, and that YOLO options play we saw certainly backs that up. What really concerns me is the insider selling. Over 18% of total insider shares sold in the last 6 months. Those closest to the company seem to be cashing out. Last time we mentioned SOUN, it was a stay away, and unfortunately those core profitability issues haven't changed.
I hear you, Brooke, but these acquisitions in the upcoming earnings on May 7th are huge catalysts. If they beat expectations, especially with the AI demand, those revenue numbers could really start to improve the profitability picture in the future. The market often moves on anticipation. And the market has certainly anticipated a lot, given that high price-to-book ratio. For now, the fundamental numbers still paint a risky picture. Understood. For SoundHound AI Inc., SOON, given the current financials, despite the high optimism, our verdict remains stay away. Next, let's talk about Sandisk Corporation, SNDK. The social media chatter here was overwhelmingly bullish, with users lamenting missing out on huge gains. We saw comments about leaving 88% additional returns on the table. This stock has seen a dramatic surge, and analysts are boosting price targets, citing strong earnings and a pivot towards AI and data centers.
Ethan, the numbers do support the missing out sentiment. SNDK's current price of $11.87 is near its 52-week high of $11.89, a massive jump from its $33 low. That's undeniable momentum. The company is profitable with solid EPS and a 34% net profit margin. And critically, unlike Soon, we're seeing net insider buying, a positive signal for sure. Our last rating was a stay away just a few days ago, but the strong Q3 earnings and strategic focus seem to have turned the tide.
Exactly. This looks like a company executing well, and the AI data center pivot is a massive tailwind. The PE is high, sure, but with this kind of growth and insider confidence, I think it's justified.
It is high, but the growth is there to back it up, unlike some other names we see. I'm swayed by the strong fundamentals and the positive insider sentiment.
All right, for Sandisk Corporation, SNDK, we're classifying this as a buy. Moving on, we have NVIDIA Corporation, NVDA. Interestingly, the user discussion was quite neutral, mostly referencing NVDA as a past AI success story while focusing on other stocks. But when we look at the fundamentals, wow.
Well, the market commentary might have moved on, Ethan, but NVDA's KPIs certainly haven't. Revenue growth is an exceptional 73.2%, and the net profit margin is an astounding 55.6%. This company is a profit machine. Even with a high PE of 40.5, the PEG ratio is 0.63, suggesting it could still be undervalued relative to its growth, plus significant insider buying over the last 6 months. While previous ratings have fluctuated, the last one was a stay away.
This is why you always look beyond the initial chatter, Brooke. The China problem is a risk, yes, but Jensen Huang's announcements and the company's continuous innovation in the AI space means this growth story is far from over. This is a dominant player in a booming sector. It's true, the balance sheet looks incredibly robust, and the growth metrics are top tier. Even with its massive market cap, they are still delivering. So for NVDA, despite the neutral social media buzz, based on these strong fundamentals and AI-driven tailwinds, we're classifying this as a buy. Next, let's talk about Micron Technology Inc., MU. The general social media post mentioned that MU ran due to AI memory demand, framing it as a past success, but it didn't really focus on current sentiment. And that MU ran statement is quite accurate, Ethan. It surged over 500% in the last year, trading near its 52-week high. However, its current revenue growth is a modest 1.96%, and the net profit margin is very low at 0.41%. More concerning is the significant net insider selling, over 145,000 shares sold in the last 6 months. Analysts might be giving high price targets, but those close to the company are taking profits. It was a stay-away rating previously, and I'm not seeing enough to change that for new investments. But Brooke, the news clearly states AI capex boom is a major catalyst. Memory demand for AI is projected to be massive, and while the current KPIs might not fully reflect it, the market is pricing in that future. This could absolutely improve profitability and revenue in future quarters. It could, Ethan, but we're entering at the peak of a massive rally with current numbers that don't justify the valuation and insider selling. The risk-reward for new capital at this specific moment is quite unfavorable. Fair enough. For Micron Technology Inc., MU, despite the exciting industry tailwinds, we'll classify this as stay away. All right, let's move on to Reddit Inc., RDDT. The user sentiment around this one was predominantly bearish, especially regarding the quality of Reddit's data for AI training, with many users saying it's full of AI-generated posts and garbage. And for good reason, Ethan. While their revenue growth is a strong 69%, the market has priced in massive future growth, giving it a PE of 47.57 and a P to over 10. The user criticism about data quality directly challenges the core AI fuel thesis that's driving this high valuation. Plus, a beta of 2.407 means it's a roller coaster, as one user put it. We've had mixed ratings, recently a speculative gamble, then stay away. I get the skepticism, Brooke, but Reddit has secured AI content licensing deals, even with Google. CEO Steve Huffman sees the platform as fuel for AI growth, and they had strong Q1 results. The insider buying of over 145,000 shares also shows confidence. The quality concerns are noted, but they're actively monetizing that data now. They are, but the market has already factored in much of that potential. If the actual quality or utility of that data for AI starts to fall short of expectations, that high valuation is extremely vulnerable. The user sentiment is a forward-looking risk. For Reddit Inc., RDDT, considering the high valuation and significant user concerns about the core business value, our verdict is stay away.
Now for Intel Corporation, INTC. There was a highly euphoric discussion about past gains, with one post celebrating an almost 11,000% in under a year return on options. People were asking, what's our next move?
Best trade ever indeed, Ethan, if you bought near the 52-week low of $18.97 and sold near the current $99.61. But those were past gains. Right now, despite some positive revenue growth, Intel has a negative net profit margin and negative EPS. They're simply not profitable, and the debt-to-equity ratio is extremely high at 36.028. Our previous rating was a speculative gamble.
But Brooke, the news indicates strong share price momentum, and we saw insider buying of over 483,000 shares. That shows confidence. They're investing heavily in new fabs, which is a long-term play for growth in the semiconductor space.
It's a long-term play, yes, but those fabs come with immense capital expenditure and debt. You're buying into a company that isn't profitable right now at a price near its 52-week high, largely driven by past performance. The insider buying, while a good sign, doesn't negate those deeply read profitability numbers for me.
Given the current fundamental challenges, despite the historical exuberance, for Intel Corporation, INTC, we have to classify this as stay away. Finally, we have Advanced Micro Devices Inc., AMD. Similar to Sandisk, the talk centered around a covered call gone wrong because the stock rallied so hard. Users talked about it being up 60% in 3 weeks, which definitely signals strong upward momentum and a very bullish sentiment.
Yes, the momentum is undeniable, Ethan, with AMD trading almost at its 52-week high after a massive run. The revenue growth is a healthy 34.1%, and there's significant insider buying, which is a strong positive. But, and this is a big but, the PE ratio is an astronomical 138.67. That suggests an incredible amount of future growth is already priced in. Also, the debt-to-equity ratio is still very high at 6.359, which adds risk. Our last rating was a cautious buy.
I acknowledge the high PE, Brooke, but AMD is absolutely crushing it in AI data centers and with the upcoming console cycle. These are major growth catalysts that could rapidly grow into that valuation. The insider buying here is key. They clearly see massive upside. For long-term growth investors, this is a company with a clear path forward in critical growth sectors.
The potential is there, but so is the risk of a significant correction if that growth slows even slightly. For new money, especially value investors, entering at this PE and debt level requires a very long-term horizon and a high tolerance for volatility.
Given the exceptional growth potential and strong insider confidence, but also the stretched valuation, for Advanced Micro Devices Inc., AMD, we'll keep it as a cautious buy.
Well, that was a busy morning, Brooke. Let's round up today's candidates. Indeed, here's our compiled list for deeper analysis. Investigate as a buy. NVIDIA Corporation, NVDA. Sandisk Corporation, SNDK. Investigate as cautious buy. Advanced Micro Devices Inc., AMD. Investigate as speculative gamble. SoundHound AI Inc., SOUN.
That's all the time we have for today on the Daily Hunt for Multibaggers.
Just a quick reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place and knowledge is your best asset.
Thanks for tuning in. We'll be back tomorrow with more AI-powered market insights. Happy hunting.